Good morning, good afternoon, good evening, wherever you are. Welcome. My name is Yochai Benavi. I am the founder and CEO of Wisteria Strategies, as well as a non-resident fellow at the Atlantic Council's Digital Forensic Research Lab. Welcome to a fascinating conversation on financing the end of the digital divide. I'm really excited to be joined today by a fabulous group of panelists. I'll allow them to introduce themselves briefly before we get into it. Alessandra, over to you.
Thank you so much, Yochai, and hi, everybody. It's a real pleasure being with all of you today. My name is Alessandra Ostati. I'm the head of digital development in the Foreign, Commonwealth and Development Office, or FCDO, of the UK government. I'm also a senior private sector development advisor and the global lead of our digital access program. And I look forward to the discussion. Thank you so much.
Welcome.
Oh, hey everybody. My name is Bulelani Jili. I'm a professor here at Georgetown University, and I'm also a faculty associate at Harvard University. Thank you so much.
Welcome.
Hi, everyone. I'm Kenton Tiba. I'm Senior Resident China Fellow at the Democracy and Tech Initiative here at the Atlantic Council.
Thank you all for joining us. And for those of you who are watching along, if you have any questions for our fabulous panelists, please head over to askac.org and pop them in there, and I will do my best to weave them in while we discuss today. Let's start with just sort of 5 facts to set the scene and help us get into deeper conversation faster. Number one, half of the world doesn't have reliable, affordable access to the internet. On one hand, two, that's billions of people who can't fully work, learn, engage in the digital economy. On the other hand, whoever brings high-speed, affordable internet to the nearly half of humanity that is unconnected will reap, uncounted strategic, economic, and geopolitical advantages. Number three, when we think about how much it will cost to connect everyone, estimates range anywhere from $428 billion on the low end to more than $2.2 trillion in terms of capital costs. Now, that's not to say that's all going to be donations or charity. This is ultimately a utility that has a very attractive, I would say, investment profile. But it's certainly a very capital intensive challenge, and it will be difficult to impossible to connect everyone without development finance institutions and other stakeholders playing a role. Number four, I think while we've seen that DFIs can and do finance, large capital projects like submarine cables, like big tower deployments, last mile connectivity that actually reaches to the home, to the business, to the community center has historically been a struggle for both DFIs and other sources of financing. And as a result, uh, the ISPs who are best positioned to end the digital divide, which are often not the largest sort of multinational telecoms that we tend to think of when we think of connectivity, but the ISPs, the more community-focused ISPs who are best positioned to end the digital divide, almost always lack access to capital. And finally, to the extent that anyone is making concerted efforts at connecting the unconnected, it's by and large China. In recent years, China spent more money on ICT infrastructure on the African continent, as for an example, than all African nations, G7 nations, and multilateral agencies combined. And this is indeed a growing area of investment for the PRC. And so to open the conversation, I'd love to turn to Kenton. Um, why is China doing this, and how does this fit into their broader strategic and foreign policy?
Yeah, thanks for the question, Yochai. And I'd say that's the exactly the right question because understanding, why China is wiring the world kind of helps us really see what's at stake. And I'd say there's sort of four kind of parts of this that are important to think about when thinking about, why China is so involved in this. So first, at its core, is doing this because it sees connectivity as power. So the PRC's made building the internet abroad a real central pillar of its foreign and industrial policy. It's not about closing the digital divide for its own sake, though that certainly, has been an aspect of it. It's really about owning the infrastructure of the future digital economy, the fiber, the towers, data centers, et cetera, through which information commerce and innovation will flow. And China's model is state-led and it's finance first. So it's backed by institutions like the China Development Bank and the Exim Bank. And it offers really cheap, fast, and politically flexible capital to governments to use Chinese vendors such as Huawei and ZTE. And this embeds Chinese technology standards and it leads to a kind of technological lock-in in which Chinese networks and fiber provide the foundations for, PRC-based platforms and services that are built on top of it. And it creates, a strategically advantageous market barrier for other companies to go in. And so this leads to the second aspect to think about with regards to China's strategy, which is it's about strategic positioning and it's also about data control as well. The infrastructure that China builds isn't neutral. It's under Chinese law, any Chinese company, even one operating abroad, can be compelled to share data with the state. In the open source, we haven't really seen instances of China compelling companies to turn this data over, but we have seen, reported instances of China compelling companies to turn where backdoors were found, for example, when China built the AU headquarters, the African
The
Union.
African Union. Yeah.
Yeah, that showed data was being exfiltrated back to the PRC through these systems. So that means that the traffic flowing through these Chinese finance networks, from biometric systems to cloud storage, ultimately becomes part of China's information ecosystem. And those data streams are valuable not just commercially, but strategically. They feed China's AI development and they provide training data for surveillance, predictive analytics, and information operations. So, when China builds a network in Nairobi or Lagos, it's also building capabilities in Shenzhen and in Beijing. Third, China uses this approach to export its governance model. This is useful because initiatives under which many of these projects fall, including, for example, the Digital Silk Road, they're not only technology projects, they're ideological ones. And so Beijing's narrative of cyber sovereignty in particular promotes the idea that governments should control the flow of data and information within their borders. And by financing and constructing the digital backbones of many countries that are unconnected or underconnected, China normalizes this model of the state-centric surveillance-enabled connectivity as the default approach to digital development. And lastly, just speaking about risks and consequences, if current trends continue, most of the world's, next billion internet users will come online through this infrastructure on networks financed by PRC banks using PRC hardware and governed by PRC standards. And this means that, their data, their online experience, and in some cases, freedom of expression will sit within an ecosystem that privileges control over openness and surveillance over privacy. And so for, like-minded countries, the risk isn't just losing market share, it's losing influence over the norms and values that underpin the global internet. And so to answer the question directly, China's doing this because it understands that whoever builds the pipes will shape the flow of data, of power, of ideas. And so to put it more, bluntly, whoever wins the infrastructure wins the game. And that's why they're so involved in this.
Thanks, Kenton. Bulani, I want to bring you into this conversation. You've actually been in some of these rooms where African officials are meeting with their Chinese counterparts to discuss the build out of internet infrastructure.
Mm.
Could you give us the sort of on the ground experience of the strategy that Kenton was just talking about?
Yeah, sure. I'll try and kind of get to this question by first speaking to kind of some of the demand factors related to why people are procuring Chinese
Hmm.
technologies, and then I'll end it with a bit of an example from the ground. I would principally say that, African stakeholders are procuring Chinese technologies in part because at one level it falls as a part of their own kind of national strategies, which is
Hmm.
to say that many kind of African countries principally see the internet as a modality of economic growth and activity. And in part because of kind of traditional industries have kind of waned over the years in Africa, the centrality of ICT infrastructure has become ever more important. And obviously, buying from China has meant more financially reachable technologies vis-a-vis kind of traditional competitors that are coming from the West. And so in some sense, supply and demand meet quite neatly in terms of the desire to leverage infrastructure for development. Now, why Africa for China? In part, it has to do with the fact that they are interested in kind of extending their influence abroad. It partly is also interested in kind of ensuring that its economy is further somewhat integrated in the kind of global digital ecosystem. They've also been interested principally in ensuring that their companies further participate up the kind of the value chains. And then it's also kind of key about this kind of lock-in point. Um, and so, how they go about doing this on the ground is really about, at one level, working with kind of on the ground stakeholders, but also national figures. So I remember once specifically being in a room where, African officials principally were interested, for example, in a data center
Hmm.
kind of offered as a product. But when you're working with a Chinese company, you're not simply receiving a data center. In fact, the data center came as kind of a bundled infrastructure that was also kind of connected with the support of an installation of an earlier fiber optic cable, but it was also connected to the potential also leveraging and use of facial recognition technologies later on within the respective city. That is to then suggest that when you're procuring from a Chinese provider, you're not simply getting one technology. You're getting an assortment of technologies that are bundled and then are also connected to this kind of other broader kind of financial infrastructure that makes it more financially reachable, which is to say, again, that like at one level, the Chinese company would have received credit from Beijing to make their products a bit more affordable, but you as an African stakeholder who might not necessarily have the financial means in order to ensure the final execution can also yourself at times reach out to, the Chinese firm that you're in conversation with, and they could put you in contact with the Exium, with the Chinese equivalent of the Exium
Hmm.
Bank to help you with those kind of last mile costs. And so this is to kind of say that there's a kind of financial flexibility when you're working with kind of Chinese stakeholders on the
Hmm.
ground. That is not necessarily always requisite when you're working with, say, a traditional Western partner in installing your technologies.
And so this is happening like pretty low level in the government, sort of meeting Chinese counterparts to say, maybe the conversation starts about we have this technology need that we're trying to meet as part
Yeah,
of our goals for the digital economy.
yeah,
And then they say, okay, let's bring in our friends from, the China Development Bank, in order to help
yeah, yeah,
finance this
yeah,
thing.
yeah,
And, you
yeah,
think you start with a fiber cable
yeah.
and then suddenly you're buying a whole ecosystem. Is that about right?
Yeah, yeah. So I would say that like the institutional distance between China's development banks and its firms are relatively short.
Hmm.
And so, juxtaposed to say, the West, where there's somewhat of an extended distance between the development banks and the firms, in China, it's short. And so, for example, at least in the rooms that I've been, they've been actually in conversations at times with, say, a policy advisor on the Kenya side, who's been, very much worried about this kind of clear kind of infrastructural gap. And that conversation was then with their kind of counterparts in
Hmm.
Beijing, who works with kind of an equivalent research institution. And from that conversation, within a matter of weeks, they already included the Exium Bank, the embassy, and then also included a Chinese local firm
Hmm.
in the conversations. And suddenly it kind of became a more realizable kind of opportunity to try and solve kind of the traditional infrastructure gap that, Kenyan officials saw.
Yeah. Fascinating, just the sort of breadth of different stakeholders within the Chinese ecosystem who are very quickly brought to bear
Mm,
when these deals are being discussed. One small last clarifying question for Bulani, and then I really want to bring Alessandra into this conversation, get a sort of different perspective how some of these things go down.
mm,
Um, but you said earlier, just a few minutes ago, that um, there's a very neat sort of alignment of sort of supply and demand in terms of what,
mm,
Africa's a big place with lots of differences, but also some commonalities.
mm, mm,
Um, when I've spoken with many African leaders, though, I often hear that there aren't that many choices. A lot of leaders
Yeah,
want, want to
yeah,
finance, have a real
yeah, yeah,
interest in connecting their populations. How
yeah.
much choice really is there on the ground most of the time when it comes to seeking, finance for especially the connectivity parts of
Oh yeah, definitely. At least on the financial part, there's not much wiggle room. They really are just really just one big player. When I was talking about the neatness, it was in relation to these already dominant player with kind of these African stakeholders who are keen on getting support for specific infrastructure projects, and so there very much is like a need to further diversify the availability of financial resources to kind of close some of these kind of last mile infrastructure
Right.
gaps, which, has already
So,
been said, is
so
kind of
on so
there.
on that note, I want to bring in Alessandra because to the extent that, any government is really putting a lot of considered effort in this area, it's our friends in the UK. And, you know, Alessandra, you've been both sort of at the forefront in terms of thinking about how to connect the unconnected. Um, And so maybe you can share with us maybe a brief summary of your government's efforts in this area, and how do you
Mhm.
think partner countries and other digital development stakeholders could collaborate and join their efforts more effectively so Bulelani's colleagues have more options when it comes to thinking about how to connect their populations?
Yeah, thank you so much, Johan. Really great responses from Canton and Bulelani. In fact, just before I launch into talking about the work of the UK in this, just to say the choice is really the key word here. So what we normally think about is that how can we support our partner countries around the world, in particular in the global south or global majority, as I like to call it, to make well-informed choices. Ultimately, it's up to them, right? They're kind of sovereign nations and they will make their own choices as to which direction they want to take. But it's really important that those choices are well informed and that there are choices in the first place. And we know also that there is a natural concentration of telecoms markets, for example. So even without taking into account, foreign investors,
Mhm.
effectively, we are talking about markets that naturally tend to, privilege two or three actors in each market, pretty much in each economy. We can see that in many economies in Africa, for example, and that sometimes creates some issues in terms of being able to really push the market frontier and get to that famous last mile or even the last meter, as I like to call it sometimes. So I now sort of backtrack 1 second. I try to respond to the excellent question from Yochai. So I'm kind of zooming out a little bit just to give the context very quickly. As UK government and FCDO in particular, we have a digital development strategy for 2024-2030, and if people are not familiar with it, just Google it. It's a nice read with lots of case studies, and you can see practical examples also of how we've been trying, not just on our own, but with lots of different global and local partners to close the digital divides. And I use the plural because, of course, connectivity for us is the absolute foundational element of digital development, but then there are also the other divides in things like digital skills, access to services, etc. But today we're talking about connectivity in particular. So from that perspective, I think first thing to flag is that for us in our strategy, but also in all the policy and programming work that we do that sits under that strategy, last mile connectivity, exactly called in this way, is actually the top deliverable. And that's not a coincidence. It's because, of course, it's the foundation of that famous stack of kind of inclusive digital transformation. So first of all, really prioritizing in strategies and plans, and because, of course, we are doing it and other actors are doing it as well. What I've seen is that if there is strategic clarity on the fact that connectivity is still an issue in the world, we have to debunk the myth a little bit that everybody sits in a coverage area. Coverage is not equal to access and not equal to usage either. So the affordability, the accessibility are really key issues. And in order to get there, we need to try and stretch that market frontier that I was referring to really include the last mile, but also generate a sort of a type of market, a thriving market at the last mile that shows its investability, so that finally both financial sector and investment sector really get interested in that and sort of start channeling some of those resources. So what we've been doing so far, in particular through our digital access program in 5 focal countries that are Kenya, Nigeria, South Africa, Brazil, and Indonesia, just to really test these models in very diverse regions. We've always worked for the past 5 to 6 years at two levels simultaneously. One is the level of the policies, regulations, particular areas of work that are systemic, things like licensing, spectrum management, etc., that create a better business environment and investment climate for inclusive connectivity. When we go to the market and community level, and I say community as well because it's still about whether the market works or not, but ultimately, really the aim is to make sure that communities themselves really can access connectivity in a way that is affordable and sustainable. The key word is sustainable. That's where we've been, first of all, tech agnostic, meaning that any technology that can work at the last mile, that is viable, is something that we are happy to support. We don't pay for technology or infrastructure, just to be very clear, that's not our role, but we come in with a lot of technical advice and capacity building and work with local organization to really, that's a really important point, to really create that local ecosystem of organizations that have the expertise and the knowledge of the context, that can work directly both with the communities, where the kind of recipients, let's say, of the connectivity, but also active users. But on the other side, also with the what I call the connectivity value chain. So where is it that we get from the middle mile to the last mile? Are there small-scale internet service providers, community networks, other models of community-centered connectivity initiatives that can really be viable, sustainable, and therefore investable? So having done all of that, just to give you just small sense of scale, you were referring to the massive connectivity gap in the world, even if we take the slightly marginally more optimistic statistic of the ITU, which is 2.6 billion people still offline in the world, which is quite scary because, it's still one third of the world offline at least. When we think about with the digital access program, we've managed to reach with sustainable, replicable models 18.6 million people. That's amazing for the small amount of resources that we had available that we could invest, but it's still only a drop in the ocean. So also another thing that is really important that I see is, it's great when also other stakeholders pick it up as an approach, is not to necessarily expect that any type of institutional donor initiative could really reach out to the whole gap, but demonstrating through where we managed to reach out, where we managed to really make it work. What model are you demonstrating, both in terms of technology and business organizational model, so that that evidence can then be used to really stimulate the two main levels where we see the huge gap of access to finance, both the kind of local financial banking sector, but then the whole investment sector. I'm not going to go into all the details of that because I expect Yochai will have lots of more questions on the investment side. So I'll stop there just to say that there is a whole spectrum of investment sort of models that one needs to look at. So I guess coming together, the last part of your question was about how can we come together better. I think there's been a lot of kind of, international debate on whether, for instance, in the framework of the UN Global Digital Compact or within the G20, just as I was in Cape Town at the G20 Digital Economy Working Group 2 weeks ago, we had our UK-led event on, innovative financing model for community-centered connectivity. And in the end, all those fantastic debates reconfirm the problem that there's both a lack of reliable data of where the connectivity is missing and where it is that we can sort of make certain models work. So the data aspect is really important. But also that, in order to really get to that last mile with financing solutions that are viable and sustainable, we need to effectively blend different type of approaches. And one thing that probably also, as we've seen in the Global Digital Compact, has been debunked a little bit is the idea that you just have one massive global fund that does everything. People often make the parallel with the Gavi, global fund for vaccinations. This is a different type of market with different nuances and different needs. So we really need to make sure that is the financial sector itself and the investors that really understand that market, and that the market in itself becomes mature for those investments. So I'll speak a little bit more on the financing models later, but I hope that
I want to pull out I think there are so many nuggets there, and I just want to pull on a couple of strings. Like, I think one was, while we've traditionally thought of connectivity in terms of the sort of large multinational players, the sort of two, three biggest companies that we see in country after country. What I hear in your strategy is a real focus on the sort of community-focused internet service providers, the sort of small and medium businesses of the ISP market as a sort of shorthand.
Exactly.
And,
That's
I'm
correct.
glad you also brought up Brazil, which I think is a fascinating market for this, where you have more than 11,000 of these small ISPs, which now collectively have more market share than the large historic, multinationals. And so I think that's a really fascinating market dynamic. I'm also hearing you say it's not, I mean, investment capital is a big problem. This is a capital intensive challenge. I would say one of the great challenges of our time. But what I'm hearing you say is that, we need to sort of think holistically. There's a part of this that is the enabling environment,
Yeah,
making spectrum available, permissive licensing,
yeah,
and sort of the sort of market enabling conditions. There's a piece of this that you were saying that's sort of technical assistance, sort of growing the investment readiness of these kinds of ISPs to build that sort of pipeline that could be investable in the future. Um, that's about sort of building alternative financing schemes, as well as sort of fostering connection between a group of different stakeholders. There's not going to be a silver bullet here. It's going to take a cooperation from a lot of folks. Am I hearing you right on some of these key points?
yes, you've summarized it really well, and maybe the example of Brazil is one that is really useful in particular because it's such a huge, complex country. I just spent 2 weeks in Brazil in August, and I was talking to all the different stakeholders in government, in the private sector, community level, and for instance, the telecom regulator there, Anatel, has a really important role in all of this, and they
Mhm.
have been really proactive in trying to understand where is it that there is connectivity that can be delivered or is already being delivered by small scale
Yeah.
ISPs. And therefore, because there are thousands and thousands of these market actors, as you're saying, Yochai, what is also important is to work directly with the trade associations, with the associations of ISPs, and
Hmm.
look at the market from their perspective to see what is it that
Yeah.
is missing, what is missing from your side, and then matching it with what investors and sort of financial sector expect from
Yeah.
investable entities.
So I want to
Right?
go back to Bululani for a second. Kenton, I promise I'll get to you in a minute. But you know, I'm struck by, on one hand, we're hearing sort of how comprehensive sort of the suite of support is that China's providing to local players. Alessandra's just talking about sort of the holistic approach that's actually going to be needed to sort of mount, credible choice
Mm,
to really help connect folks.
mm,
And then in a roundtable that Kenton and I did a couple weeks ago, someone said something along the line. This is a connectivity financier
mm.
said, China's eating our lunch for a 2 to 3% cost of capital.
Yeah,
And
yeah,
so I'm curious from,
yeah.
again, having been on the ground, what do you think it takes for countries not named China to really sort of be players and offer the kind of real choice that Alessandro was talking about
Yeah.
to partners, whether you want to interpret that as partners in the African continent or more broadly?
Yeah. The kind of the statement definitely much resonates with me. And I would definitely would say that like in part why China does so well is not simply a contingency of the size of the checks that they sign, but also a contingency of how they have effectively mobilized capital on the ground. And so in many ways, what this then truly invites us to think about quite critically and carefully is how do we do blended finance? And obviously, it raises questions of like who's going to be doing the blending and and how we're going to be doing.
Everyone loves blended finance. No one wants to do the
Yeah,
blending.
nobody wants to do the blending. And but again, like that is simply like a coordinative problem, at least on our side. That's not a problem on the China side.
Hmm.
In part because they already are doing blended financing in many ways, in part just because of the
How
sheer
so?
diversity of re so like and let's say for example, again, this was just like an example on the ground where I was talking to stakeholders who were interested again in kind of smart city technologies.
Hmm.
And there was one particular concern about the technological dependency on China vis-a-vis the local talent, in part because they were getting a lot of technical assistance from a Chinese partner. And one of them said, why don't we help you get scholarships for some of your students? And so, but that financing is not directly coming, from the partners they're working with, but it's coming from, from a different part of the government. And at times, some of those scholarships might be even connected to, say, private donors. And that was the point, is that it's not directly, blending, but it's kind of an assortment of financing that people are pulling from a
Mhm.
various array of folks on the China side. Um, and I was going to say something else. And I think this particular point is also about how do we go about de-risking investing in Africa, which I
Mhm.
think is like an important point. And obviously, I think some people have already started trying to develop, for example, like, political risk insurance. And that is something that actively needs to be, again, leveraged in order to make it more competitive. Um, for, and a multiplicity of kind of stakeholders to get more involved in Africa. And this in particular for the kind of small and medium-sized enterprises who do want to participate in Africa, that will be kind of a key lever that they can somewhat try and leverage. And I think lastly, I think we actively need to work to close the institutional distance between development banks and firms on the ground. And particularly in terms of just simply helping them understand what are some of the resources that will be made available to them by development banks so they can actively do the kind of work that they want to do on the ground,
Mhm.
specifically as small and medium enterprises. And this again is like a thing that you would kind of see that is a bit distinct from at least the China side, where there was kind of clear connections between the Exim Bank and those kind of companies that were already operating on the ground in Africa. And that to me, at least, are some of the three things that I think can be worked on.
Again, there's so many gems in all of these interventions. So I just want to pull out a few. I mean, I think the political risk insurance point is interesting. I mean, I'm here in Washington, the Development Finance Corporation has been doing political risk insurance for years, if not decades at this
Yeah,
point.
yeah, yeah, yeah.
And, I could imagine a hypothetical deal where you might have one DFI that was, taking a concessionary position in the capital stack to
Mhm.
try and catalyze some private sector capital. You
Yeah,
might have another DFI that was doing a political risk insurance wrapper on that deal. You
yeah,
might have another DFI. Alessandro, you were saying earlier you're not doing investment capital, but you're doing a lot of the other kind of TA work.
mm,
Maybe there's someone who wants to help subsidize some of the transaction costs. I mean, I've
mm,
done I've done some of these deals, right? I mean, you might
yeah,
spend depending on the complexity of the deal. Like you might
yeah,
you might spend $50,000 just on legal fees just to get the investment agreement done.
yeah,
If you're trying to bake that cost into the deal
mm,
at the check sizes that a lot of these networks can pull down, like there are a lot of creative ways that we can make the math work, but I think it takes a lot of these different players. And I think that idea though that not every player has to do all parts of
mm,
this holistic support, which is very much, I think, what China is doing, even though
yeah,
there may be different arms, different organizations,
yeah,
different agents and organs. But what I'm hearing you say is like at the end of the day,
yeah,
this is all China as sort of the actor,
yeah,
as part of, a sort of very concerted strategy, as Kenton was saying earlier.
yeah,
Um, and so, Kenton, I'm sort of curious you know, uh, where do you see the weaknesses in the Chinese strategy? And I want also, well, I was sort of suggesting that there's a little bit of blended finance approach there. My understanding is that the Chinese strategy is actually really kind of state driven in terms of where that capital is coming from. So maybe you can clarify that point for us
sure.
and sort of give us your take on where you sort of see some of the weaknesses and challenges that can be learned from that might create market opportunity
Mm.
for countries, donors who are interested in providing credible alternatives here.
Yeah, absolutely. So, when we talk about China's connectivity financing, the weak point isn't simply that it's state driven to a fault, I would say, at some points. So, this model relies on massive government-backed industrial policy. We've been talking about, the Exim Bank, and, the deeply subsidized financing that enables Chinese vendors to undercut competitors. I think I was reading something, earlier yesterday by, some digital products by up to like 30%. And then like, cloud services, which is a different thing, but like cloud services are routinely priced 20 to 40% in Southeast Asia below what, US competitors would provide by across a number of product lines. So it's really steep discounts. It looks really, this looks really powerful on the front end, but it's actually super capital inefficient on the back end, which is something we kind of covered in our previous roundtables. These projects are kind of expensive to maintain. They're politically negotiated oftentimes as more so than being commercially viable and can't have come in the past with some painful consequences when repayment pressures are, defaults either in some cases have transferred ownership of critical infrastructure to the PRC or has led to, some really unhealthy looking balance books on China's side. And so because China's financing is so centralized and opaque, fails to harness this kind of diverse capital and technical expertise that is,
Mm.
I think, what we've talked about, somewhat required for sustainable development. And this is where I think that, like-minded partners would have a strategic opening. We've talked about blended finance. There is a comparative advantage that US and its allies and other partners have in this blended finance approach, mobilizing these different, sources of capital together to lower risk and expand the scale. And so instead of one-off loans from a single government bank, with some sort of like modest concessionary government capital through the things we've been talking about, like first loss positions or guarantees or below market rates, can unlock orders of magnitude more private investment. I think one example that was brought up in our research often was the SDG loan fund,
Mhm.
in which like $100 million first loss layer, I think from the Dutch Development Bank catalyzed around 1 billion in private capital. And so this approach isn't just, more efficient, it's more resilient because this kind of blended approach ensures infrastructure is commercially grounded and locally owned and politically sustainable. And it can be especially powerful, I think, when we bring in or when it brings in specialized intermediaries, something that we've been talking a lot about in our different engagements around this topic. In this case, specialized intermediaries would be, potential new connectivity focused funds, as we were just kind of talking about, that can do this sort of pipeline development, due diligence, and risk management that big agencies, like DFIs or DFCs, can struggle to execute. And when combined with some of the government coverage for things like, the risk insurance, for example,
Mhm.
intermediaries can take on these, early stage higher risk deals and work directly with these local ISPs, which, as we have said, are delivering often faster speeds and lower costs than these huge companies, but are too small to access the traditional finance. So ultimately, China's weakness isn't just this kind of debt load, it's that it spends enormous sums to buy influence while locking countries into these sort of what look like somewhat brittle or unsustainable models. And,
Mm.
like-minded countries and partners don't need to match Beijing dollar for dollar, but they can outcompete by being smarter with capital in this sort of blended finance model with these, with DFCs, DFIs, a retooled DFC perhaps, with these specialized intermediaries to capitalize private investment, can really deliver this local ownership and create infrastructure that's not just, connected, but connected on, more democratic, small d democratic terms. So that's the real opening that I think is there for like-minded
Yeah.
countries.
I'm glad you brought up the SCG loan fund because I think it's a really fascinating example. So the numbers on that were, I think that MacArthur Foundation put in $25 million of an unfunded guarantee, and that's the bottom of the stack. FMO, the Dutch Development Bank, sort of put in 100 million. I don't remember if that was dollars or euros, but 100 million, let's say, of sort of concessionary capital that would then be the next stage of that stack. And then Allianz, the German bank, led a consortium of private capital that was about $1 billion. And I think that really shows that if a government is willing to take that concessionary position, right? So it's not just about how do we mobilize government capital, but especially being able to help pull that deal together. And I will say for our colleagues at MacArthur, like $25 million to catalyze more than $1 billion of investment toward your goals sounds like a pretty good day at the office to me. But I think that sort of shows, and that's going to ultimately give a pathway to raising way more money than a government can bring by itself.
Mm.
And I think, as Kenton was saying, and I just want to double click on this, more expertise,
Yeah.
right? That might be reflected in terms of that investor base who can really also help to contribute to making these deals work, succeed. Um, the specialized intermediaries point, I think, is really important. And I wonder, do you think that will help? Bululani was talking about reducing the distance between DFIs and this on the ground operators, especially when we're talking about the kind of small, medium, community focused operators that Alessandra was talking about.
Mm.
Curious to hear everyone's take on sort of that idea of a specialized intermediary. Do we think that would help bridge that gap, bring folks closer together, like Bulani was saying, and sort of what characteristics would such a specialized intermediary need to have in order to be effective in playing that role?
Can I jump in?
Please.
I will. We go in alphabetical order again. So, yeah, that's a really great question. And I really appreciate the points that Bulelani and Kenton were making also about the blending, and nobody wanted to do the blending. So somebody is doing the blending. In some cases, it looks also quite successful. But what I would like to see down the line with all those kind of, massive operations, do they really get then to the last mile, and to what extent are they really managing to kind of make that capital flow to those communities that are really underserved or excluded? And so to your question, I think the role of the specialized intermediaries is certainly, in my view at least, certainly important. And I think if we could combine that role with the role of the sort of existing either digital development initiatives, or the role also of the sort of or specialized organizations that can also be local organizations, in the sort of civil society that really understand how inclusive connectivity works at the local level in the local context. I think between the two of them, one much more technical from the finance intermediation perspective, and the other one more about understanding how certain technology and business models really work at community level. Between the two of them, I think they could do a great job to build that pipeline for the investment. I've seen that this is, if we are thinking about the role of development finance institutions in particular that you alluded to, Yochai, I always in my mind try to think both about the sort of multilateral ones, the sort of the ones from bilateral quote unquote institutional donor countries, and I could talk about BII in the case of the UK, former CDC, for those who are not familiar with that. But then I also think a lot about the capability of the country level DFIs, and the importance for the development banks within the partner countries to actually also understand their own markets and be part of the partnership effectively of the ecosystem, and that sort of almost, how can we call it, almost like investment chain. So in a nutshell, absolutely yes, really important role of specialized intermediaries, but always combining that technical knowledge of finance and investment intermediation with the sort of knowledge of the other ways that we support digital connectivity, from policy, regulatory,
Yeah,
technical assistance,
if we just
blah,
create
blah,
a
blah.
new fund staffed with a bunch of traditional bankers, we're not going to get different outcomes,
I
right?
don't think that would actually exactly. But anyway, so I guess I'm biased. I used to work in financial sector deepening, as it's called in jargon, and financial inclusion, etc. So I come from that background of knowing that you need to almost like educate the financial sector to understand which markets are actually quite. They may look very risky, but actually they are quite investable in the medium to longer term. So what do we need to do to get to that point? So so again, yes, role of intermediary, specialized intermediary is very important. Thank you.
Yeah, definitely.
Ooh, Anna, you look like you wanted to jump in on that.
Oh no, yeah, definitely. I was just somewhat echoing with everything that was particularly said, and part of ensuring that these intermediaries are, locally astute while simultaneously they themselves also understand some of the kind of financial jargon that comes along with it. And in part, being on the ground, what I've consistently noticed is that like the disconnect is partly at the level of like the absence of that kind of institutional role. And then simultaneously, when you ever do find a financier on the ground, they at times just don't necessarily have the requisite kind of knowledge about the respective African market, and I've always consistently wondered as to, how do we improve the available data about some of these kind of African markets for, the financiers, but also principally for those who, want to, participate in kind of making, digital futures more inclusive.
So I'm curious how how you would think about going about standing up such a sort of specialized intermediary. It seems like 0 to 60, probably a little challenging.
Yeah.
What do you see as the low-hanging fruit? What are sort of the first steps that you'd like to sort of start seeing folks take?
Shall I jump in again?
Please?
Okay. So I definitely don't have all the whole answer, but I think starting from the low-hanging fruit, as you say, Yochai, first of all, I would personally like to see that all the organizations, like us, including FCDO, that have worked for several years on trying to promote inclusive, meaningful connectivity at the last mile with sustainable models, et cetera, et cetera. We've got so much evidence, knowledge, experience. But I think, as like many other development actors, sometimes we fail to match that with the other type of organizations that have the control over and also the knowledge of really significant and complex sort of financial instruments. So how do we bring the two things together? And that's not, as I said earlier on, that's not necessarily about setting up like a massive fund, but rather maybe some sort of platform, I would call it in a very generic sense, that can bring together those who have done all the work that is more what I could call ecosystemic, and the people who are actually very kind of imbued, in this sort of financial and investment knowledge, and can themselves actually help to structure some of those deals. So I think first low-hanging fruit is bringing together that sort of, let's call it the non-financial work with the financial knowledge. I'll stop there for now.
Yeah. And at least for me, I'd say also, how do we ensure that like there is domestic capacity? I've generally found that like a lot of the general discourse is about, empowering, the multilateral institution, or it's about, supporting their kind of local grounded efforts. It's also important for the requisite kind of local institutions to be able to directly speak with them and engage with them in a kind of in a long-term way about how they resolve their domestic kind of issues. In part just because of trepidations over about asymmetrical knowledge between both those kinds of parties and the
Hmm.
kind of deals that they can kind of build together. So whatever kind of platform we're trying to create, it should also be in line with how do we ensure that there's domestic capacity being built in within these kind of respective kind of
And when you
platforms.
say domestic capacity, you mean at the governmental level, in terms of local operators, in terms of like the ecosystem of partners that,
Yeah,
that are not actually providing service or telecom service, but are, part of making connectivity happen.
yeah.
Where would you sort of target that
Yeah,
local capacity?
I was saying it quite generally in the sense of like really all the kind of
Yeah,
the
and I'm gonna call you
stakeholders.
out on it, Bululani.
Yeah, for sure. I was definitely just talking about all kind of stakeholders from involved, because I do think at one level, the local telecommunication companies might have capacity, but that does not necessarily is not necessarily reflective of what's say available in government, and it might not necessarily also be available in the kind of in the small ISPs, and it definitely won't be, available with maybe some of the local civil society organizations that are simply trying to pontificate about the kind of, say, human right futures that they're trying to create as relates to the
Yeah.
internet. And so, the kind of the platform that I was hoping that we're imagining would kind of have a broad scope in terms of thinking about who are the requisite stakeholders and how do we then ensure that there's a kind of an even distribution of capacity across
Mm,
these stakeholders,
yeah.
that is not intentionally excluding, say, for example, a local human digital rights organization that is preoccupied with precisely closing, say, the gap around the misuse of, say, surveillance technology, which
Hmm.
I've kind of consistently found, at least in some of the meetings that I've been involved in, where, you know, the government is talking to this kind of stakeholder and bringing in these technologies, and nobody has ever thought, well, maybe we should also include a civil society organization who also might be interested in this kind of topic.
Hmm. Yeah, I think that it's rare. I'll take some moderator's prerogative here. As a former connectivity financier, I was the co-founder and CEO of Connect Humanity for many years.
Mm,
I would say one, it's rarely just sort of like one ISP, and that's the only stakeholder you deal with when you're trying to invest and make connectivity happen in the community. There's a whole constellation of support that really comes out around these deals, especially when we're talking about connecting hardest to reach, lowest income communities around the world. And the second thing I would say that I've seen, to your point, Dulali, that we need to sort of think broadly about this.
mm,
Basically, every deal requires TA. It's profitable. Like at the end of the day, we still make money. But we've done deals where, or I've done deals where, we've seen someone might be really good at network engineering,
mm,
which is great, and they're really creative about how do we, reach that community? How do we get creative with some of the, wireless technologies, to overcome, terrain and so forth.
mm.
And you got to teach them about the business of running an ISP, right? And sometimes we have people who are really good at running businesses,
Yeah,
not as good on the community front. We're
yeah,
pulling in that local, digital rights civil society group, another, maybe an economic development focused
yeah,
civil society group that has that community trust
yeah.
can be very powerful in terms of actually making that deal happen. Uh, Sometimes we got to teach people about licensing and permitting. Like they might know how to run smaller network that flies under the radar.
Mm,
But
mm,
if they're going to scale, especially scale with substantial investment capital, there's just a world of licensing and permitting and so forth. And I know,
mm,
Alessandra, your government has funded some training efforts in that area. So I think that really sort of speaks to sort of how we have to look at this holistically.
mm.
But at the end of the day, we also got to get the money, right?
For sure, for sure, for
Like,
sure, for sure.
um, and so, curious if so it sounds like specialized intermediaries. Thank you, Kenton, for bringing that forward. Feels like an important part here, helps us bridge that distance between development banks and development donors and investors of all kinds and the folks on the ground. It sounds like we need to have a certain amount of holistic support. We got a lot of tools in the toolbox, and I should say a lot of these tools already exist, right? Like we have tools like guarantees, right? We have tools like political risk insurance. We have tools like development bank. I mean, Alessandra, you were talking about the financial deepening. I mean, there's a long history, certainly from the British government, of working with development banks, working with other financial sector leaders around the world, to sort of mature markets in certain areas, to make more kind of deals possible. Um, we're heading to the top of the hour here, so I want to ask my favorite question for these kinds of conversations is sort of you can wave a magic wand, you can do one thing to help realize, I think, our shared goal of connecting the unconnected. Where do you what do you do? Let's start with Kenton and then Bulani and then Alessandra for the last word.
Sure. I mean, I don't know about waving the magic wand, but I will say, having political will and in some cases narrative alignment, just sort of, reframing connectivity. I think this is more for the US context, as a foundation for, things like AI competitiveness, economic resilience, and, democratic governance, and not just something that's been somewhat relegated to the bin of just like a development goal. I know there are lots of downsides of securitizing development language, but I think in order to build a lot of the political will or get, the right people on board to understanding the real upsides of, investing in these kinds of projects, an ability to sort of really articulate the economic and, technological upsides, in this case for the US, I think would go a long way. And just to kind of like put in a data point here, I remember from one of our roundtables, I think once this kind of these capabilities are laid, like once this infrastructure is there, you see something like 85% of the services that are provided to these populations are from American companies. So if you want to talk about economic competitiveness and foundations for future economic growth, there's a real argument to be made there for, fostering the political will to get involved in this and care about this issue.
Yeah, I'd say like again in a closing remark is that like for me again it's also quite about changing mindsets about this. Is that like in part, infrastructure is about today, but it's also really about the kinds of futures we're hoping to create. And if we're trying to make more inclusive futures, will be contingent on the kinds of infrastructures that we choose to invest into today. The particular kind of point, that was raised about the digital stack is that, China disproportionately participates in the base of the digital stack, and that when you go up higher in terms of the technological sophistication of systems, you disproportionately find more American involvement. I'm just going to use here Kenya as an example. About like 90% of all the kind of, once the connectivity is done, people are consuming American kind of products, that be kind of Google or that's, WhatsApp with Meta kind of products being made available. And so the picture, at least on the continent, is quite clear, is that the roads of the internet are being built by China, but the cars and maps are still American. And the idea that like, but like where those American cars are going and like where are those American maps are pointing towards is precisely contingent on the kind of road infrastructure that China is building. And so we have to start thinking systematically about the kinds of directions we want those cars to be going in.
Yeah. And I think that ties to Kenton's point earlier, right? That whoever controls the infrastructure wins the game. Like we have a lot of debates on on the policy level, on the application layer, but if China or someone else is controlling the underlying infrastructure,
Yeah.
it's a little bit kind of details.
Yeah. Eventually you just go
While
where the
where
highway tells you to go.
exactly,
It's like
exactly. That's a
it's really
great
that
analogy. I'm
simple.
gonna have to borrow that.
Yeah, yeah, yeah.
So thank you for that, Bulani. Alessandra, take us home. What do you want for Christmas?
For any religious or non-religious
or yes,
festival,
yes, I'm
I
sorry.
would, just to be neutral and respect
Of
everybody,
course.
I would first of all want to reassure Bulelani that all the work that we do is absolutely geared towards supporting the local capability. That's what we do to make sure that digital transformation, as we say, is inclusive, responsible, sustainable. So it's all about local capability and local ownership. That's the whole point of development. But then, building on what Kenton was saying, it's also about how we frame the narrative. So if I had that famous magic wand, I would do two hits of the wand. One would be to get everybody to finally understand that really digital access, inclusive connectivity is the basis for the whole digital economy, inclusive access to famous AI. And so we have a big AI divide already. Without last mile connectivity, basically we can't close that loop. And then the second hit of the wand would be to accelerate that, what the efforts that we are making with partners like the Association for Progressive Communication and others to demonstrate the sustainability and the viability of what I call social enterprises of connectivity. So small scale ISPs and community networks, so that we finally, really nurture that market. So that's my gift for any festival that you want.
I love that. I want all of these things. No,
It's a big Christmas tree.
and I think my word here is really to start taking concrete steps, right? I think to sort of pull all of your ideas together, we're not going to do this overnight, but I think we need to start thinking in more structured ways. And so I think that we've seen a lot of discussion about financing mechanisms, for example, in the WSIS process and the GDC process, at the International Conference of Financing for Development. I may have gotten that acronym wrong. You know, there, but I think we need, I would love if we had a dedicated conference on connectivity finance, right? Would love to see an international task force that was thinking about, let's actually start sketching out what some of these structures, what a specialized intermediary or a set of specialized intermediaries would look like. Let's start mapping out, what would a comprehensive TA program along the lines that we've been discussing today look like, and really sort of charting that course. And I think, that planning work, probably not that expensive, but could really unlock both a generation of opportunity and, untold benefits when it comes to whether it's national security, as Kenton was talking about, whether it's about economic opportunity, political opportunity. I think there's, it's just connecting someone really unlocks all of the other rights and causes that we care about. But until we solve that, and we solve that holistically for the world, um, we are going to continue to have haves and have-nots. We are going to continue to have digital divides, plural, as Alessandra was saying. We're going to, when it comes to AI, we will have those who get to, realize the benefits and the potential and promise of this technology, and those who are going to continue to suffer its disruptions. So thank you all for a fascinating conversation. I wish we could stay longer and keep talking, but for me, that's a sign of a good panel. So I look forward to more conversations, and thank you all for tuning in.
Great. Thank you so
Thank
much.
you so much, everyone.